Hey traders, happy Friday. Another exciting week in the markets. Didn't really start out that way. Actually started out a little bit, just kind of muted, a little bit choppy, right in between. I'm looking at SPX right now, by the way, right in between 69.25 and 69.90. Nothing to be overly excited about. And then Thursday, wow, what a drop. Today just ended up kind of flat on the day. NASDAQ looks pretty similar, although a little bit weaker. Now the Dow hit new all-time highs at 50K. So that was pretty exciting. But anyways, long story short, never a dull moment. Am I right? So let's get into it. I'm going to start out by talking about the weekly quant pivots because, you know, that's one of my favorite things to look at every week. So let me bring up that chart. All right, so just as a little bit of a reminder, we have the weekly H1 right there, the weekly L1 right there. And what we typically see is that during that period, price likes to stay in that zone. It's called the sandbox because that's usually where price likes to play. In fact, if we take a look at the statistics up here, you can see that statistically, SPX only closes above the H1. That's this level. This week it was at 69.91. Only actually closes the week above that level 5.6% of the time. And then if we go down to the L1, only closes below that level, which this week was at 68.42, 11% of the time. So you can see why I say when price usually stays in this zone, that's why. I mean, those are really low odds that price would close outside of that area. Now, this was an outlier week because price did close below the weekly L1. This was one of those rare, only 11% of the time, weeks where it actually did close below that level. Now, let me tell you how to trade this and how I wanted to trade it, but unfortunately did not get the opportunity. So on Wednesday, when price just barely moved above that weekly H1, that is the point that you would look to short, assuming that you get some kind of a reversal and a good price, right? So this actually happened within about the first 2 minutes of the bell Wednesday morning. And so I was scrambling to set up the trade and then price just quickly dropped below there. So I never actually got my fill. For about, probably the first half hour of the day, I kept thinking, well, it's at 69.91. That's really close to that major psychological level of 7,000. Surely we'll get a retest, right? And then I can enter my call credit spread where I would short the 69.90 calls. Nope, never happened. Never happened. So then I thought, okay, maybe we either get another opportunity, and, Thursday or Friday, it does another retest of that H1. Nope, that didn't happen. However, we did get a test of the L1, actually moved below it. Again, never got the opportunity to short those puts, to sell the puts, which in hindsight, I'm glad I didn't. The reason I never got into a put credit spread right here at 69.42 is because I just couldn't get a good price, which is no surprise, right? When price drops like this, volatility spikes and it just makes things more expensive. And I'm really picky about my entries. I know that one of John's famous lines is don't be a D for a T, and I love that. However, I'm going to add a little caveat to that because you know that I'm a trader in the small lots trading room where we are trading small accounts. kind of have to be a D for a T, right? We want to make sure that our risk to reward is really, really good. So I wanted to get at least a 250 credit on a 5-wide put credit spread. Could never get it. Really, I would have preferred like 260, 270, 280, up to $3. That would have been fantastic. Couldn't get it. So I'm glad I couldn't get filled for that put credit spread because it would have been a loss. Actually, had I gotten it yesterday, I would have taken profits today when it's right up here. So probably would have turned out okay. But it's this call credit spread that I'm really kind of bummed about. That leads me into the next thing that I want to talk about. Normally I leave this for the end of my videos where we talk about our weekly review, and let's go back into our trades for the week and just kind of see what we could have done better. Normally I leave that for the end of my video. I'm going to start out with it right now though because of what I'm talking about right here. That missed trade that would have turned out so perfectly for me. And what I want to talk about right now for this week is not letting FOMO take over. So it's really easy for me to have FOMO around this trade because that would have been some really nice profits, right? Here's the thing though. We do have to be discerning when we are looking to enter trades. That means sometimes we're going to miss out. If we jumped into everything the moment we saw it, we would have a lot of losing trades, right? Sometimes it's just best to sit on our hands, be patient, wait for the setup to be exactly the way that we need it before we enter. Okay? The price of that is that sometimes we're going to miss out on a winning trade. Overall, if you can have patience and learn to sit on your hands, in the long run, your P&L will thank you. So this weekend, I want you to go back through your trades that you took during this week or that you didn't take. Really, that's really the key here. Go back through your charts and look at, were there any trades that you wanted to take but you missed out on it, even if it would have been profitable? Switch your FOMO to JOMO. This is another John Carter-ism. Instead of fear of missing out, we're going to concentrate on joy of missing out. All right. We want to reframe our mindset to joy of missing out. All right. So look at something, a trade that you weren't able to get into for whatever reason, and just be grateful for the fact that you sat on your hands, because the ability to sit on your hands overall will be a net positive in your account. So if you journal, you could journal about that trade that you missed out on. Say, I'm so grateful that I have the ability to sit on my hands. If you don't journal, you could put it in the comments before. I want to hear about it. Tell me about a trade that you missed out on, but frame it in a JOMO mindset, joy of missing out. Okay. If you don't want to do that, put JOMO on a sticky note and then hang that on your trading computer so that it could be a good reminder that you can't touch all the water. All right. And FOMO, not really a good headspace to be in. JOMO is. All right, so let's move on. That's enough of that for now. Let's get to some other trades and what I am looking at for next week. So SPX being below 6,900, not a great place to be. All right. You know that I am a big follower of Spot Gamma. I read through all of their notes, look at a lot of their data throughout the day. They guide a lot of my trades. And one thing that they have been pointing out for the last week is that below 6,900 on SPX, there is nothing but negative gamma. They actually think it's possible, not that it will happen, but it is possible that we could get a flush all the way down to 6,600, which seems so far away. I kind of hope we don't get that far, but they're not really seeing any support until that level. So it doesn't mean that we will get down there, but we could get down there. Now let's talk about just next week. All right. So statistically, if you refer to the Stock Traders Almanac, this is one thing that I look at every day and every week, just as a guide, not as a fortune teller. Tuesday, that's the day we come back, because remember, this is a 3-day weekend. Tuesday, statistically, is a bullish day. So we might get a nice relief bounce on Tuesday. I don't want you to automatically get overly bullish just yet, though. The way that I am planning on playing that, if we do get a bounce on Tuesday, is I'm really just going to be shorting any rallies into OPEX, which is Friday the 20th. Thursday and Friday are both statistically bearish, according to the Stock Traders Almanac. And once again, I'm just going to remind you, Traders Almanac is a great guide, not a crystal ball. Okay, so we just kind of use it as kind of like maybe a little bit like a weather forecast. All right, chance of rain, not it will rain, that sort of thing. All right, so if I'm going to target some levels below, what specifically will I be targeting? Let's draw some fibs on here. I'm just going to take last week's low, February 5th, to this all-time high about a week, I think a week, maybe 2 weeks, looks like about the week prior. Okay, so just draw some fibs right there. That way I can get these extension levels down here. Now we've got the 1, 2, 3, 6 extension right here that lands at 67.27. The 1382 lands at 66.95. We could call that 6700. If we go break below that, then I have a 1618 extension way down at 66.43. Now, this morning, when price was selling off at the open, I did look at trace within spot gamma. There was a lot of negative gamma all the way down at 67.50. Okay, just above this first extension level. So should we break last week's low at 67.80, definitely think 67.50 is in the cards, and then that could open up the door for these two extension targets right down here at 67.27 and 6700. All right, so what I would like to do, if we do get that bounce on Tuesday, I would like to open up an SPX butterfly with Friday's expiration, and I'm probably going to be targeting 67.25. That will be my center strike, and I will most likely make it about 25 wide. When I was pricing it out today, I could pick it up for about 90 cents each. So that's a pretty good debit for a decent sized net. We're talking about, 50 points within this area that could wind up profitable. And if they're only 90 cents, I'd probably pick up about 3 or 4 of them, scale out some when I hit a double to take some risk off the table, and then see where the rest goes. But that's what I'm looking at. Haven't actually entered the trade just yet, but that is what I'm looking to do on Tuesday, should we get that bounce. All right. And should the bounce not come on Tuesday, if it does come on Wednesday, I don't mind doing it then either. But long story short, I really just want to short any rallies next week into OPEX. After OPEX, we can look at some things, see if we're in the same type of environment or not, and change the plan as needed. But this is what I've got for next week. Okay, so let's start looking at some individual tickers that I'm going to be putting on my watch list for next week. Now, full disclosure, I said this last week too. Going back through my trade journal and my spreadsheet for this year, really SPX this year has been my money maker. Individual tickers I've been kind of flat on. So I'm really focusing on SPX right now. That doesn't mean that I haven't found some winners. A couple weeks ago, I called out Walmart. She's still on fire. A lot of things looking good. But let me bring this over because I now have a new and improved way to scan for some really good looking trades. If you haven't seen it yet, this is John's Squeeze Ultra radar screen. So let me break it down. First of all, what is the Squeeze Ultra? That is the new replacement for the Squeeze Pro. All right. Squeeze Pro, an amazing indicator. Hard to believe it could get any better. But you know how John Carter's brain works. It is always looking for ways to improve. And boy, has he found it. So Squeeze Ultra is now not just going to tell you when something is in a squeeze, it's going to tell you when something is in an ideal squeeze. This is a question that John has been getting for years, is how do you know when a stock is in a squeeze if it's actually a setup worth taking? The Squeeze Ultra answers that question for you. In fact, I'm going to backtrack a little bit. Before I get to that radar screen, I'm going to show you what an ideal squeeze looks like. This is going to be one of the tickers that's on my watch list this week, Lam Research. It is in an ideal squeeze. You can see it right here. There's this beautiful label within this Squeeze Ultra box. It says ideal. So that is your first clue. You really don't need any clues after that. But you can also see it with these white arrows below the squeeze histogram right there. What's nice about the arrows is that it's going to make it easier to back test the squeeze, after the squeeze is over. So you can see right here, Lam Research back in November, it was in a squeeze. Because there are no arrows right there, means it was not ideal. So that is not one that you would have wanted to take. And you can kind of see that even after the squeeze fired, it just didn't go very far. Normally when a squeeze fires, we want to see it go up to +3 ATR, if not a little bit further. This one didn't do it. And I think the Squeeze Ultra knew it was not an ideal squeeze, which is why it did not go that far. Let's see if we can find another ideal squeeze. A little one right here. We had one day in an ideal squeeze way back in September of 2025, and then look at what did happen. Oh, that baby fired. So do you see how an ideal squeeze can show you the better setups within a squeeze and help you drown out the noise of the not ideal squeezes? Yeah, I'm pretty excited about this. I've been fortunate enough that I've been able to play with this tool for the last several months. So I can tell you that I do have plenty of experience messing around with this new indicator. So it is just as fabulous as I'm making it out to be. It's not just 3 days that I've been messing with this. I've got a few months under my belt and it is fantastic. All right, so now how do we find those ideal squeezes? All right, this is the next extra cool tool. John's Squeeze Ultra radar screen. So what you're going to do, so all of these categories can collapse if you want them to, just to kind of make it easier to scroll. All right, let's start out with financials. This is how I have been scanning for these perfect setups, all right? So first thing I'm going to look at is this column right here. It's going to tell me if this particular ticker, and the tickers are over here on the far left, it's going to tell me if that particular ticker is in a squeeze, if it's in an ideal squeeze, or no squeeze at all, okay? Next thing I'm going to look at is this column right here, because that is going to tell me if the moving averages are stacked positively, negatively, or if they're in chop. So what I am looking for is I am looking for something that is in an ideal squeeze, haven't found one yet, keep scrolling, and has positively stacked EMAs, all right? NOC, Northrop, is in an ideal squeeze with moving averages stacked positively. Next thing that I personally am going to look for, and you might be different, okay? I just want to point this out. I'm going to look at where price is within the 52-week range. 93%, a little high up there for me. You might be one who is looking for a breakout. And I love breakouts, but I want them from a little bit further down too, okay? For me personally, I'm going to be looking for something that is within 80 to 90%, okay? Next thing I want to look at is the relative strength, okay? Northrop has a lot of relative strength. That is a good sign right there. It's at 86%. I'm looking for anything that's over 70%. So this one almost meets my criteria, but not quite. If we keep scrolling, we can find all sorts of beautiful, beautiful squeezes. Here we go. Look at this. Look at this. Lamb Research. That's the one that I was just showing you a moment ago. It is in an ideal squeeze, positively stacked moving averages, 89% of its 52-week range, and that is a whole lot of strength right there. So when you see all of your ideal criteria next to each other, then you can bring it up on the chart, see if it actually looks good on the chart, and then go from there. Here's another interesting category right here. Now, this is not something that I really pay attention to, but I know a lot of you do. Danielle does as well. This is going to tell you what the short float is, all right? So lots of really, really cool information that this radar screen gives you, and it has sure cut down on my time scanning for ideal setups, all right? Now, John just did his first webinar on Wednesday talking about the Squeeze Ultra and this radar screen. He's doing another one this coming Wednesday, February 18th. We're going to put a link down below. If you didn't catch the first one, I highly recommend that you catch this next webinar on Wednesday the 18th. Just go to this link down below and you can sign up. We'll send you a reminder with a link. All right, so let's get back to those tickers that I saw that are on my watch list. So back to Lamb Research. Where am I targeting Lamb Research? I am looking at 270 as my target on this. What could you do? You could do a call debit spread, 260 by 270 for the March monthly. It's only going to cost you about 250. That's actually a pretty good price. So that's what I'm looking at to enter. Love that it's holding up well during, you know, a lot of other things that are selling off. All right. Next thing on my list, SMH, Semiconductor ETF. Look at this. Once again, ideal squeeze. Ideal squeeze. Holding the daily 21. Very, very nice. What am I targeting on SMH? I would like to, you know what? Let me switch over to a different chart. We'll go back to Lamb Research too, because I wanted to point this out. Pardon me for this little error. All right. There. Now we've got my voodoo lines on here. All right. So SMH, I'm going to be targeting this fire line up here at 441. Really, I would be targeting 440. Now I priced out a couple of call debit spreads. They're both for March expiration. That gives us plenty of time for this squeeze to fire. And it gives us plenty of time to get up to that target at 440. So March monthlies is what I was looking at. A 430, 435 call debit spread if you kind of have a smaller account. It's only going to cost you about $1.70. That's a great debit for a 5 wide. If you wanted to go a little bit wider and do a 430 by 440 call debit spread, last time I looked at it, it was at about 360. All right. I promised you that I would go back to Lamb Research because there are some voodoo lines on that one that also actually, nope. You know how I got to this one? I think I drew some fibs. So let's do that right now. Let's go from this high to that pivot low. Yep. And we do have some nice targets right up here. The 1382 fib extension is right up there at 270, and it's just above the current +3 ATR. So that is how I came up with that target. All right. Thank you so much for having patience with me while I go backwards. What is next on my list? Phototronics PLAB. This one also came up on that radar screen. I already have some fibs on here, and what I am targeting is this 1382 fib extension right up here at $43. This is a nice one because it's a lower priced stock, which means that you can just get calls on it. Even if you have a smaller account, shouldn't be that big of a deal. Again, March monthlies at the money calls are pretty inexpensive. So, you could get a couple of those. If you do have a larger account, of course, go in the money. That's always a safer bet. All right, so that is what I am looking at right there. As ugly as a lot of things look right now, and believe me, I get it, a lot of things look ugly, especially a lot of the things that we normally like to trade, like the mags. Ugly. As ugly as a lot of things are, and as yucky as the indices are, there's still a lot of great looking charts out there, plenty of things for you to trade. So you don't need to only trade SPX like I mostly am right now. We'll see you back in the rooms on Tuesday.